The EV stocks faced materials decline over the past weeks. Investors continue to sell high-growth names such as NIO, XPeng and Li Auto, amid a rotation toward value stocks in the market. A global chip shortage continues to hurt the production growth. Investors start to concern about the ability of these EV players to meet aggressive growth targets, considering the valuations. However, as per the EV industry expert Michael Schlisky, this may be the perfect time for investors to test the waters for stocks that may have fallen too far, too fast. Schlisky sees current conditions offering an opening for investors to buy in at attractive valuations. He does note that the EV sector is likely to continue to face challenges in the near term. He recommends a 2-year time frame for investors in the sector. If you would like to invest in EV stocks, how do you pick the right stocks to invest for long term? Let's understand the EV companies before making investment decisions. If you are new to this channel, welcome. We are making videos to analyze companies and provide information to help you understand what to invest. Please like this video to help the YouTube algorithm to increase this video's search ratio, and don't forget to subscribe to the channel. Without delay further, let's get started. For the year 2020, China's EV sales in the country soared to 1 million units. The units of EV sales is forecast to rise to 5 million by the end of 2025, according to the Chinese government. Some analysts estimate that EV sales in China will hit 10 million by 2030 and further increase to 20 million by 2040. In the first quarter of 2021, Tesla delivered a total 184,800 cars worldwide, exceeding the average estimate of 169,850 provided by Bloomberg survey analysts. Tesla is not the only carmaker to report strong delivery in the first quarter. NIO and XPeng both recorded a 5-fold surge in sales in the first quarter of 20,060 and 13,340 units respectively, as smart electric vehicles increasingly gained popular in mainland China. China was a major driver for Tesla's growth, with sales more than doubling to $6.66 billion, representing almost 1/5 of Tesla's overall sales volume. Tesla's volume stands apart from most other carmakers, who mainly are showing declines in part because of electronic chip constraints. NIO, XPeng, Li Auto face countless challenges, with losses still to snowball in 2021, the automotive chip shortage, market concerns about US-listed Chinese stocks and outlook for central bank policy tightening drove the Chinese electric vehicle stocks declined considerably this year. NIO and XPeng are down by about over 26% year to date, while Li Auto is down by close to 32%. Despite the impact on account of rising interest rates, Chinese EV players are also being hurt by a couple of other factors. Firstly, competition is mounting. For instance, Tesla recently started selling a China-made version of its Model Y, while China's largest carmaker, Geely, is launching a premium electric car brand of its own. Secondly, the global chip shortage has started to hit Chinese EV majors. NIO temporarily suspended vehicle production activity at its manufacturing plant in FA for 5 working days starting from March 29 due to a lack of chips. Thirdly, US-listed Chinese stocks are being weighed down by concerns that they could be delisted from American exchanges, with the SEC beginning to review the financial audits of overseas companies. The EV market in China is exceptionally large, with deliveries in 2020 standing at about 1.3 million units and sales projected to grow by over 50% this year. Homegrown brands such as NIO, Li Auto, and XPeng are better positioned to benefit, given their deeper knowledge of the local markets, favorable regulation, and unique innovations targeted at Chinese consumers. NIO and Li Auto are well positioned to capitalize on the consumer shift towards clean energy vehicles. NIO is the closest competition Tesla has in China. NIO is extremely well established in the Chinese market and enjoys a strategic relationship with the Chinese government. In the fourth quarter of 2020, NIO's sales more than doubled year over year to $1.03 billion. Its vehicle deliveries were up 110%, totaling 17,353 units. NIO managed to narrow its non-GAAP loss to $205 million or 15 cents per share compared with a net loss of $435 million in the prior year period. NIO delivered 20,060 vehicles in the 3 months ended March 2021, increasing by 423% year-over-year. The company continues to expand its product portfolio, which should be a key driver of its top-line growth in 2020 and beyond. NIO is growing at a fast clip and continues to work towards improving its profit margins. It's now valued at a market cap of $59.1 billion, indicating a price-to-sales multiple of 17.7 times, which is reasonable considering its growth rates. Analysts forecast NIO will double its sales to $5.22 billion in 2021 and grow its top line by another 65% to $8.6 billion in 2022. They also expect its losses per share to narrow from 72 cents in 2020 to 10 cents in 2022. Although NIO stock has been facing volatility, NIO continues its innovation to roll out impressive tech, such as its upgraded battery swapping stations. On 15 April, NIO and Sinopec, the Chinese state-owned oil producer, signed an agreement for a strategic cooperation on the deployment of battery swapping stations. This strategic partnership will accelerate NIO's market expansion in its home country. Sinopec is an integrated oil company, the biggest in China, with both upstream and downstream operations. It also has the distinction of being the largest refinery in the world, and has the second highest number of gas stations in the world. The collaboration will efficiently consolidate the resources of both companies to bring a better charging and swapping experience to EV users. NIO's Power Swap Station 2.0 at Sinopec's Chaoying Station is NIO's first second-gen battery swap station. Each Power Swap Station 2.0 is powered by 239 sensors and 4 cloud computing systems that will help users complete a self-service battery swap with only one click while staying in the car. NIO's Power Swap Station 2.0 is capable of completing up to 312 battery swaps per day. In the first quarter of 2021, XPeng delivered 13,340 vehicles, beating its guidance of 12,500 for the period. XPeng sales numbers remain steady and reduce losses. In the quarter 4 of 2020, XPeng net loss was 787.4 million yuan, which is about $120.7 million, versus a 1.15 billion yuan deficit in the third quarter and a 997.1 million yuan loss in quarter 4 of 2019. XPeng's performance continues to gain momentum. It's only a matter of time to see positive earnings per share. Like NIO, XPeng also has a strong connection with the Chinese government. It recently received $76.9 million from the Guangdong provincial government. Li Auto reported 5,379 Li 1 models sold in January, representing an increase of 356% year-over-year. However, the total was 13% lower than the 6,126 vehicles it delivered in December 2020. Since Li 1 was launched back in November 2019, its total vehicle deliveries were close to 40,000 as of January 2021. In the fourth quarter of 2020, Li's total sales rose 65% to $635.5 million. However, its operating loss was $12 million. In Q4, Li's free cash flow generation was $245 million. For full year 2020, Li's reported its sales totaled $1.45 billion, and its operating loss was $103 million. In the first quarter of 2021, Li Auto estimated shipments would reach 10,500 to 11,500 vehicles, up 300% year-over-year. Its revenue growth is expected to be between $450 million and $494 million, up approximately 280% compared to the same quarter of 2019. Li Auto is valued at a market cap of $17.44 billion, and some analysts forecast that Li Auto will double its sales to $2.89 billion in 2021 and further grow its top line by 79% to $5.16 billion in 2022. Its bottom line would improve from a loss per share of 28 cents in 2020 to earnings per share of 18 cents in 2022. Li and NIO have multiple secular tailwinds that make them both solid long-term bets. As the EV market continues to develop in China, the country's economic policies that include subsidies and regulatory credits will play an important role for manufacturers. However, every fast-growing industry attracts competition, which suggests the EV may soon become crowded, resulting in a deceleration of revenue growth. While auto sales declined in 2020, global electric vehicle sales still increased by 43%. Secondly, governments around the world are enforcing tighter regulations to help EV sales increase. And finally, technological advances and a change in consumer preferences also serve as important tailwinds for the industry. China is now the world's biggest EV market and has fared quite well despite the pandemic. And unsurprisingly, some of the biggest electric vehicle stocks are from there. That's why this list has some of the biggest names in the EV space which are betting big on that market. Hence, EV stocks like NIO and XPeng have high potential growth and will be a good pick for long-term investment. Of course, Tesla should not be neglected. We picked these 3 stocks because we believe that these 3 stocks will have high potential growth from 2 to 5 years. Last week, NIO, XPeng and Li Auto stocks rebounded. Based on the candlesticks chart, looks like XPeng has higher potential to move higher in the coming week. However, for long-term investment, it does not matter how the stock price moving as the companies are good with potential future growth. Rewards could be seen in few years' time. I am not a financial advisor. Please do your own research before making any decision on your investment in stocks trading. If you like this video, please click the like button and subscribe for more future videos. Otherwise, please leave us a comment below to help us improve our future videos. Thank you for watching.